Hello guys, welcome to a Train Parrot. I'm gonna give the update for the evening on what's going on with the market. We can see that Bitcoin is doing pretty well. I want to talk about a few patterns that are bearish in case we saw a rejection slightly higher than this, and that's going to be really important. So let's get very quickly into the charts. You can see here I'm in the 4-hour chart that after the retest we started putting a lower high in here. I mentioned that this morning in the update, but now we are putting a higher high on the RSI, which is actually something bullish because it means that we still don't have bearish divergences, and that is great. But the main point of my attention from the point of view of TA tonight is this area in here. If we were to break down there, most likely that could come with a breakdown with this ascending wedge on the 4-hour. We also have one in the daily time frame. I want to cover that one as well. I want to emphasize that we have a huge path of liquidity to the upside to continue triggering, and the higher we go, the more intense it's going to get as a short squeeze if we continue going higher. But if the pattern broke down in here, be prepared for different outcomes, and I want to discuss about that in the rest of the video. So first we have the ascending wedge on the 4-hour in here. We have test support on the CPR, and we have formed a few fair value gaps that obviously are the most tempting areas for the price to come for a retest or for a fake out of this ascending wedge. Remember, on an ascending wedge, you typically come back to the bottom from where you came from. It's a bearish pattern. It can also have a bullish breakout. It's rare, but it can also happen. And we can see in the past that there are some examples where Bitcoin actually broke out on the upside of an ascending wedge. Very rare, but it happens. And at the moment, we have the CPR at 69. That will be great if before we come back down, if before we start looking for a low, because we have done high, low, high, low, high. So pretty much it's the time for producing a low. And I'm not saying a low of coming all the way here or sub 60s, but ideally we pick one of these two fair value gaps. We have the 65.9 and we have the 65.2. Those will be great if we can just take that and cause a fake out of the patterns. If we just go there and we continue our attempt. If we were to do that, it will be really bullish because in that case we are kind of ignoring the effects of this ascending wedge and the bearishness of it, and that will confirm to investors that actually at this point in time the bulls are in control, and even some of the bearish patterns are going to be ignored. The first thing that is going to tell us that we are breaking down there is the 71 RSI. We also have the potential for the RSI to come back below inside the range here. So if it's a pullback slightly more intense, that could happen at 65 RSI and then 72. 65 and 72. Let's see where is that in the price, and let's see. 65, that is right there in the wedge at the bottom there. And 62, let me see if I'm doing this right. So we have 72, I'm doing it upside down. 72 first, that's the highest level, and pretty much that is what's currently holding us at 67,658, and followed by 65, and that 65, yeah, that was precisely the wedge. So it's consistent at this point in time, a breakdown on RSI and on the wedge, just because I have placed it pretty much there, touching the bodies of the candle. And we also have a formation like this on the daily, and we have a top here on the channel that is 72 in the price means 69.5. We talk about that in the morning. And one of the good news is that on the daily the RSI is putting a higher high. Okay, and I've seen a few notifications on my email of bearish divergences potentially forming in here. That was when the RSI was still below 66, but as it gets into 68, 69, is higher than 66. and that means that we are basically still with strength. Okay, if we start seeing an RSI that gets lower than 66 at the close of today, that means here there's another bearish divergence. And remember, we can put some bearish divergence. We can afford to get some of them on the way up, but we need to look into other elements and not necessarily just sell on the first bearish divergence. That will be really silly. And let's have a look at the other things I wanted to mention. The monthly, if you haven't been watching my videos in the past 2 or 3 days, I consider this already that has broken out because it's above this level. Of course, it hasn't put the all-time high, but this candle on the month of October is already broken out. You can see the line there. The line is the resistance, and we started from the top, and we can test this, sure, but we are above already. It's on the weekly where we are slightly below it still, because we are forming this with all these weeks, and therefore we are still below it. We're putting the battle right there. We are at the zone of the maximum risk, as I say this morning. And I think I'm missing something from here. Yes, the ETFs, 3 days in a row of record inflows, 250, 555, 371. Let's see what comes in today. Let's see if we see some selling at some point. So far, historically, in the past 6 months, every time we have a lot of buy, then we get a pullback. It's almost like guaranteed that when ETF buys too much, pullback right after. I mean, just to give an example here, is 500 and then you get 242 of selling. But it has happened pretty much in every peak of the price. I have to give you a heads up that if you go to my channel, to the main page, the Trading Parrot on YouTube, and then you head to playlists, you can find a selection of tutorials. I have put up this playlist with 4 videos so far. It's got the RSI, the CPR, trading different, and Cerberus, and I will continue to add more. Make sure that you favorite the playlist, you save it somewhere, and you put it in your future videos for when you want to study a little bit of new things to put in your arsenal of tools. Good news, because this morning we were talking about the CBD on spot coming down as the futures was going up, and we don't want a rally to just be fueled by futures. We want the spot to start picking up and buying as well. If we see that, then we can say that we turn this move into the third level of open interest in the past 6 months, more sustainable. At the moment, the candle is slightly above the level of resistance that we place in here. Still, it can fake us out, but hopefully we're gonna close the week with an open interest over this, because we have seen in this area in here in the past week, we were calling for the open interest to precede the breakout of the price, and we did the breakout in here. We went higher, price still didn't break out at that point on the W formation. We were still here in the neck, right in the neck, but the open interest was already above it, and we put another one. We came for a retest, and then we pushed to the 21 billion, which is what we were hoping to see. Deposits versus withdrawals are still losing. Withdrawals are way better, and that means that things are bullish when it comes to what the big whales are doing. I'm still curious on what the hell is going on with the long-term holders, why this continues to do some very soft and mild selling in here. This is the candle of yesterday, 15th of October, and was pointing down. So I wonder if those are just some chicken long-term holders that they want to sell right before the breakout, or if they have some good information telling them that it's a good idea to sell. I remind you that we have a buy signal information tonight, midnight. Hopefully we confirm it. As long as the price holds around here and the hash rates remain high, then the hash ribbon that talks about capitulation from miners is going to remain in the buy. We have a pending buy in here at the top that happened on July, and we've been underwater for many months since then, and right now we are right above the entry of that buy. So that means that we have this buy and we are in profit from that buy for the first time since mid-July, and we are in sharing profit on this buy that is in formation. That will be great. That will be awesome. The timing of this typical capitulation is October, and sometimes there is a drawdown before the buy signal. But this time it's been just up. So I don't know if we are late for that with drawdown of 15%, or if this drawdown that we have here is sufficient and we can just consider it as paid the debt. Yes, this morning, make sure you watch the video about the morning. There is some very interesting outcomes in here, and I made a mistake on the stochastic RSI on the weekly, so make sure you watch the video so you understand where are we with that. In terms of liquidity, we have in here the daily time frame on the swing chart, and you can see this formation in here. This is a bearish formation, but there is a heck of a lot of incentive for price to continue higher. We have all these levels with liquidation pools that are definitely going to attract the price, but we need to take a breather, okay? It's not healthy to just come in here without taking any pullback, because that makes the movement a lot more risky, okay? So if we just continue and put another candle in here and another candle in here, then there can be one of these liquidations that push us back down too fast and too far away down. I prefer to see a little bit more respect in here. As I said in the live stream yesterday, I think it was, I say I prefer that we stay there and we continue. Remember, you can build a bull flag right there and keep all this liquidity in here in paying for 1 week or maybe a few days, and then that is really helpful for the price, because it means that those shorts, many of them are gonna chicken out. They are already underwater. Their positions are big in red and they are risking liquidation. And some of them are gonna say, guys, this is gonna happen. We're gonna make an all-time high. We need to close the position and take whatever we have left. And that, guess what? That attracts the price even higher. So that's why I think that holding around there, putting them into a little bit of stress could help the price to have this battle in here against all the liquidity that we are currently seeing. And it's not minor, the liquidity we have here at the top. We have 83 billion at 70k, and we have 60 million. We have 60 million at 68.7. So those two levels are definitely extremely big. In here we didn't have that and we dropped to 49. In here we didn't have that, we have 60 and we dropped to 55. And at 73k there was 74 followed by 70. So almost 140 million of selling at the all-time high. In here we have 83 plus 60, that's roughly 140. So it's getting very close of this resistance in there. But in the past, that is what happens, okay? So don't get me wrong, in here there was a lot of selling pressure as well, and the price continued going higher. Once you nail that equation of liquidating shorts, being at the right price, buying pressure from the whales here that we can see. Let me zoom in on the 6 month. You can see that now we have both whales, and the green are also following up. The red is selling. I don't know why. The red is the third largest size of whale. They're selling, but the top two largest whales are currently buying, and we have those limit orders there. As I mentioned this morning, you can see in the order book in here they're placing some selling pressure at 68.3. This is quite large at 69 with 700, and then we have at 69.2 381, and at 70k 370, and some support at 66 674 with 500. That's it. After that we have support even below 60s and below 50s. And I wanted to show you something, and let me see if I can find it in here. First it was this one. No, I'm gonna skip that one. I'm gonna show you this one, the battle of bids versus liquidation levels. And let's do a catch up in here. This is the whole range since March, and currently if we are just highlighting the largest levels of liquidation, not just largest, but the ones with the highest leverage size, are these ones in here that go all the way to 59k. So those are right below the price. We start at 65 and we have all those levels. If we calculate the total delta of those, basically shorts versus long liquidations, we can see that there is a small fraction, not small, 2 billion in delta of liquidation coming from the lower end. That's just the delta, the difference between the liquidations above versus below. And we have those in the short term, in the daily time frame. At the same time, we have a heck of a lot of ask in here, ask liquidity, that you can see that as we go from March into today, it's been decreasing and we're starting to see more bid coming in, which is great. Okay, that's a shift of momentum into buying pressure. But at the moment, we are touching this level in there. And when we touch this level, when we get the maximum ask liquidity and consistently we get loads of long liquidations. Let's do a recap in here. Let me zoom out this. You can see in here loads of longs risking liquidation at 73.5 at the all-time high with the largest ask liquidity. Boom, we come down. Here, loads of ask, loads of liquidation from longs, we come down. And then once again in here, same equation. It's just that the levels of liquidations are depleting. So initially we had 20 billion, then we went to roughly 3, and then 1.7, and in here 5 billion, and today we have 2 billion. But we have a heck of a lot of ask liquidity right there. And the global longs are coming down into the red area. So look into the price and try to see confluence of things. So we are starting to build a case for a pullback. In short, if you want the short answer, I think there is a chance for that. Obviously, nothing is guaranteed, but we also have the 4-hour hive sell signal. We have the 1 hour that we didn't respect at all. The previous two we did, but these ones are quite heavy. A 4-hour hive signal means that we have divergences from different indicators and we have reached a threshold of the maximum number. And at that point, things start becoming very difficult to continue, plus this big selling pressure there. So it's going to be a big fight and I'm gonna enjoy it. And I hope that you guys are subscribed to the channel so you don't miss any of this information in the upcoming days. Is where we're gonna see the most fireworks, hopefully to the upside. And I have a new partner, which is Blowfin. If you're in the lookout for a non-KYC, extremely easy to set up exchange that offers leverage across everywhere in the world, you have Blowfin. And it's so easy to set up. You just have a look at the description down below and you get up to 10,000 in bonus if you open the account with my link. I managed to get this for you guys. I initially got just 5,000, but I push back and I got 10,000 for you. I hope you guys enjoy it. Have a look at the description. My favorite products are all over there. If you feel that this channel is giving you good value, please consider to have a look at any of these products. That really supports the channel and it keeps me motivated to make 2 videos a day to keep you updated on Bitcoin. And at the same time, now we're doing these tutorials. So I'm going to teach everything I know step by step on different short tutorials that you can watch in the week and learn more about trading. I'll see you in the next one. Take care. Bye bye.